Hello, everyone. Patrick Befi, High Life Radio, and our TC Kassam, and your debro, and Mary. Send every Monday, 7 to 9 p.m. Your ha a Sikasem Hojuma. Once again, welcome, everyone. Welcome, Patrick Befi here. High Life Radio, Sikasem. That's a financial piece. Nah, April. I'm saying, I check a crap by Yoha. Send a Monday BIC. Hello, everyone. And so, be a become kakra asem a savings. Why? This is why savings money and saving money is bad or stupid. And then they become asem. But before I want you to like, share, and subscribe to Patrick Befi YouTube channel. Before I start, I think I'll be a crown for paradigm shift one. We'll program here every Wednesday, 4 p.m. Eastern Standard Time, 8 p.m. Ghana time. A friend paradigm shift, a program here. We talk to a lot of people about the in our life information in our I see any different information. You say you probably bring different information. Intimi crime move BBA or see intimi crime movie and intimi BBA. But we talk to people all the time. We talk to everyone. A lot of people they've been able to do something. The right information. The team join Patrick Befi YouTube channel, be a live show, and I say anytime be a call online, you'll be alerted to join here. Hit the bell, and I say hit the bell now. My time be a call online be you'll be notified to be able to join. So once again, join Patrick Befi YouTube channel now in your paradigm shift. And yes, also I'll be to share after programs now. Again. Welcome. Michelle be and I like kakra mufanche me. So your topic he share a topic ni BM this is why saving money is stupid. This is why saving money is stupid. And you become myself. Now, this is why saving money is bad. And you become myself. You see, when it comes to savings, like saving money sounds, wise, right? But, and yes, sanity. How, say save money, quite a first boy, I'm encourage savings in Kwani. Different things. So the first one, understanding why saving alone won't make you rich. It's true, saving alone won't make you rich. Savings accounts be great here. Saving account, what percentage of savings account? I don't know. Maybe I will, but maybe I'm waiting and say a 0.25, 0.2, 0.023 near day. And if you imagine, say, if you are making that interest on your money, it doesn't matter how it is, you're not going to be moving an inch, you're not going to be going anywhere. That money is still going to be there. But why do we save? You see, if you really don't have a name for the money you are saving, you are doing it all wrong. And it's true. You see, if name the man who save, you are doing it all wrong. Why? You see, there should be a name when it comes to saving. That money should be invested if you don't have a name for it. If you want to go buy a car, who save Wakuto car? Okay, maybe at the next 6 months, may save Wakuto car. That is fine. Maybe I have something coming up and me remodel my kitchen. The next 6 months, I'm saving to do that. That is fine. What else? Maybe the next 6 months, the next 1 year. That is fine. But if you do not have any name for that money that you are saving, then you are doing it all wrong. That money should be invested. Now, you see a kind of investment in stock market in there are so many ways I bet me invest to Sika. It will never be building a business, be a business, be a why dream say, and no crash another thing. I'm saving trying to build a business. So if you don't have a name for savings, you are doing it all wrong. You won't be able to savings. No, it's not like we don't want to invest by because of protection. You see, that is stupid. You protecting that money by forgetting that there are so many ways you can go around doing that. Because whenever you let money sit without a name on it, you are losing money. I know, say very recent now, inflation about being very popular. You see, inflation has been with us for so long, but because of COVID, because of what happened during COVID, inflation is so big. Household name, no name will be drawing name say inflation. Inflation has been staying with us for so long. Every day, inflation and unity. That is why 20 years ago, now we used to $20, we used to 20 cedis. It means the top watcher. They say that same 20 cedis now, it means top watcher amount. This all used to maybe 30 cedis. That money, inflation account. Inflation there has been with that for a long time. That is why I'm saying, if you do not have a name for any money you are saving, you are doing it all wrong. So understanding why savings alone won't make you rich. So if you are saving your way out, you are saving your way through to be able to get richer, that is wrong. It will never happen. Imagine, say you are saving if you're putting even 10,000 a year in a bank, whereby you're making about 0.05%. Time in the bedroom, 100,000. So limitations of savings. Saving alone does not grow wealth. Significant due to limited returns and inflation effects. That's an American. Especially about inflation now, because won't mean save your way to become rich. You cannot save your way to be wealthy, all because that alone will not get you anywhere. That money that you are trying to save should be invested in so many ways. There are so many things to wait me at that savings. I know it's probably brave. We are scared. We don't want to take that risk. We don't want to move forward with that because we should say Yesika. So see me wadan phobi. Adebi amekana say on the osu who say scanner da one niaje. Boy juma pa ba who say 40,000, 50,000 da wa na niaje. Adan because office okoko invested that money na that money beko. Again, not the stock market and kwani baby abitina save usika and also bitina invest usika. There are so many places abitina invest usika. Ubitina to house, ubitina a friend say asset be a bit bring you money. That is what you should be doing. By just saving that money alone will not get you anywhere. Impacting a friend saying, impact of inflation. Inflation reduces the real value of saved money over time, eroding purchasing power. They said American 20 years ago, the friend saying 20 cedis, $20 every time amount. Intimate talk about the same. Why? Because inflation is always. When you look at a place like United States, for instance, apart from COVID, when inflation costs through. Inflation has been every year is about 4%. So if you haven't this 4% coming towards your money, hitting your money, eating your money, not with this Esikan stock or Tona Esikan Benya 0.5% or so. You see how the difference is. That means every day in, day out, now with this kind of token, that money, you are losing that money. You are losing money a lot because inflation about 4%. But also you see kwako 200 months can be 0.05. It doesn't make sense. You can never be rich on that. I know say yes, you move be on my catcher say and save money. You will be a catcher say saving is the only way I bet me aboa. Yes, you have to have a name for the saving. I mean saving to invest. You see, when you look at rich people, when you look at wealthy people, wealthy investors, what they do is, even if they are saving, they are buying time. And the moment opportunity comes, they strike. You see, by some may invest savings in that is what they say. They are looking for the right opportunity, but they still don't invest when the right opportunity comes. You see, they hesitate because of musro. Umufi say investment wrong. So many times you hear people calling, Patrick, what can I do with my money? At the end of the day, that is fine. That will get you less, your friends say, interest. Anything that you invest in that you don't want that money, the principal, to move an inch, that will not get you a lot of interest on it. It will not make you rich, because that risk now will be taken on. That little risk now will be taken on. And the your friend is saying, wait a minute, I don't just go spend your money, just invest anyhow. But you invest by whereby say we take a calculated risk. Yes, investment be a risk, but you just investing. So we invest it. You take a calculated risk near risk, because we share so many investment. There's a track record. There's a track record, so long track record, 100 years, 50 years. What has this investment could do? Make me after that investment, no must start to say me investing or that, But so we see can to na saving. That will not get you anywhere. So this is the things that we have to do. Calculated risk. Hello, everyone. And someone Michelle Bia for joining in. So yes, we need to, a friend saying invest. We need to save, but that savings has to be, say, a timing, not opportunity, but near the invest. So shany probably anytime that there's opportunity because opportunity, say recession happen, that was so much money. That is where stock market are for. So many investment are for. You see, there's this guy now can be about 2008, where people were struggling. 2008, 2009. He has been saving so long for this opportunity. You see, when it comes to the United States, people get rich, and I say that time when there's a recession, when it's a stock downtime, that is where people start making money. That's where a month for started so making more money. Why? Because we were trained for that long. Because for the past 100 years, we've had about 18 downturns and recessions about all the time. And when this happens, stocks fall. Sometimes 2029, 28, housing crunch. Houses be very for, pricing wasn't the same. It was gone. And what does people start doing? Almost toward this investment. So if you are saving that, then that's what you but start to say, oh yeah. Say me save towards any time these things between happen. Na my day, but so we save na name so we save just like that. Now we save no who any say the madam for na make an oil. So this Canada one can that will not get you anywhere. So you make sure say if you are saving that, there should be a name on it. All the time I can say we'll saving us a dinner saving now, we saving, so you are doing it all wrong. You see, even I know say if you are earning income, it's so tough to say not have emergency fund. But I have evolved from that thing, that just putting in emergency fund, it doesn't make us think well when it comes to investing. And I say, because if you are investing and you are buying asset, you are buying stuff, that's careful on same debris, you don't really need emergency fund. But if you don't do that, then you need emergency fund. But imagine you have so many things, you have different assets, you have multiple incomes, because when investing with different assets, 3, 4, 5, the BSK funds them every day, you see money coming through your hands. Then you don't really need emergency fund. So in that situation, you see, these are the people who are all the time they are investing any money that comes to them, because even anything happens, every day be 5,000 every day, 10,000 every day. So anything happen within 2-3 days, wait till you get that money, even if it's emergency or waiting there, I take care of that. So yes, if you are not in that situation. So now I advise people, instead of saying, oh yeah, emergency fund, try to invest in things all the time. Near the BR investing, the BSK found some, the BSK when so and this happen was all of a sudden. Now you see that mentality of saving is gone. Now I started taking new thing the investment all the time, investing quite away. Trust to be baby and also investing. You see, They also say when it comes to things that we have to understand assets and investing. See, it is asset so because in those things, nothing asset, liability, investing, and all those things. No, this is where you have to have financial education to be able to, know all those things. If you don't know all those things now, a man here thing, a man here thing, so many ways. You have to know all those things. You see, like I was saying, a lack of scarcity. You try to save the savings say the end goal. Save it to me and invest in size. But when the time comes out, when the time comes out, we are stuck. Why? All because our mental we don't want to take that risk. But in life, we want to take it. Everything is risky. Everything that we are doing is risky. And that is a dear bit to me. You see, when it comes to saving, it looks as if it sounds good, especially if we need that habit. Now, it sounds very good. But and yet, say, because because before you invest, you have to save before you invest. But the mentality should be that way instead of say be saving. Nipa will bring or save. The entire hate say I've seen so many people, I've talked to so many people when they try to save, and they won't invest. Group point also when invest in a pay no more tricky. Why? Because now they don't want to take that risk. Why? Because they're afraid they will lose that money. But like I said, every investment is risky. In fact, but the hard part, and they say, the more I will put it down, I will save. You are losing more than the risk now also will take. Because if you are saving 10,000, that 10,000 is bringing you about 2.5%. But we take it that risk, then no about 10%. You see, the past 100 years, the stock market, S&P 500 to be precise, has been averaging about 10%. Even the last 5 years, it has been averaging more than that. So imagine 10% and 0.5%. So even if we take it that risk in Ukraine, yes. You see, I don't know. Sometimes I'm not focused. I say I have not seen a time whereby I say the stock market, we use for the example, say the stock market has gone down completely. One day. Now Dow Jones 47,000. Sorry. Not Dow Jones A0, A, B, and C. You see, the worst time I a friend said 2008, 2009, that time crown it went all the way half. And even half, it was around 9,000 something, went all the way to 4,000. Now the same thing is about 47,000 today. So even if people almost stay in, people be almost drew right now. You see, so that risk we have to take. Yes, you need to take that risk. You can't just save your way out. You can't do that. So there should be a name on that savings. Like I said, may try some talker, may try some baby. Then it makes sense. But I said, me save it just like that, me save na ma save to a point whereby I say the time no crab because the name was to save and invest. Time no draw was investing. That doesn't work. You see, real savings it devalue when inflation exceed interest. Go say bibiako. I explain that part. No, and ebema what me move forward. See, there are so many people out there betting on say omudi savings in kwan bit me IBB. Omudi savings in kwan bit me all because of that, because they are scared. Investing build the world, said the American. We invest here, build the world. And the world building is very important when it comes to investing. You see, you go all the way back to, let's say, 1935. You see, Dow Jones was, I think, 355 at that time. 355. I just said it today. a 47,000. A 47,000. See, there are some people that I don't know where they get their stats from. They don't know where they get their information from. All the time, almost say the stock market is not good. But that is not true. You see, on average, it gives you 10%. Sometimes it goes down, but most of the time it's up. And as year go by, a cost through. It imagine all the way say idea a cost from all the time. I don't know from that time now say I shoot it from 355 all the way to 47,000. Look at the percentage. Look at the percentage from that time. Look at the percentage. So the way I'm on full seeker and yes sanity. And if you are investing now, it changes BBR because of the compounding. You see, investment grows through compounding and increase return. You see, there are three things when it comes to so we invest here. One, your time, and the interest, what you are earning on, and the money. These are the three things. And some of them are you cannot get back, like time. You see, the more you wait to invest, the more you save, and you don't invest, you lose that time. You see, when you start investing in your 20s, let's say 25, and even if you invest $100 every day, for the next, maybe till time you retire, which is about 65, 67, the investment you are doing every day and the compounding that is coming on will make you $1 million+. But if you wait for the next 10 years to invest, so 25 all the way to 35, even if you do 200 a month all the way to the same age, 65 or 67, you will maybe make half of that money, that 100 from 25 a year. So it tells you that the time is very important. So all the time, every time that you are staying in investing, you are staying in saving your money, scaring that you put that money into investment, that is what you are losing. The time which you cannot get back. The time which will never come back. You see, at the same time, let's look at this calculation too. If you start saving at the age of 20, let's say from 19 all the way to 25, 27, save, so 8 years, from 19 to 27, every year we invested 10,000 with a rate of 10% for 8 years. So or 2,000, right? 2,000 every year. 10,000 is a lot. 2,000 every year for 8 years. That would be 16,000. All the way from 19 to 20, 19 all the way to 27. And you stop. You don't invest anymore. Obi on best start free 28, 27. No, no, the 2,000 every year. Obe spend 8 years. You no best spend 2,000 every year from that time all the way till 67, 66. Will not catch. They will not spend it save 2,000 every year for just 8 years. Now they will not spend it over 37 years putting 2,000. All because of that small portion, that small time now saving. So anytime you are saving, that is how much you are losing. Anytime you are saving, look at how much you are saving. Will be on years, I don't know. Or not the 37 years, every year be out the 2,000 to will be 8 years because we're in eternity. Almost can I the way 8 years per now, no started early. We're way ahead. You see, that is how so we invested. Now compounding start to say you see, when you are compounding, when you start to invest here, you look very beginning. I say a tough. Why? Because you don't see anything from the first year, second year, third year, fourth year, fifth year. You start seeing friction when it's about 7th year. You see, yes, and this is the reason why I'm trying to explain this. Is so many people think say, as I said, you invest here, because if you don't take care within the 4-5 years, the first 2-3 years, more help because you don't see anything, especially if the money is not that big. We invest 100, we invest 200. Because imagine if you invest $100 every month for first year, it's 12,000, 100,002. About 10% krana, it's about 1,004. So you need 1,004. So the second year we do the same thing, 1,100, 1,002 plus that is 2,000. So we need 3,000. The third year, it's very discouraging when you see that. But when it start going up, you see all these things. This calculation, I'm saying it here because sometimes we need to see these things. No, a bit me boa emma because them say you move on my savings. No, hey, bibia, hey, I drink say and one ye may hey, fancy hana memra. Your retirement calculator be high, bit me. I share that calculation. No, ama it me a hunsai. I'm saying several times, but let me show this again about that retirement calculation. You see, it's so hard when you are doing this. So let's say you are 18. Then your first calculation now a year, will be 19 years. We invested 2,000 every month, 2,000 every month to 27, 2,000. So 2,000 every month, saying 2,000 every month. For the year, if I say 2,000 every month, so 2,000 a year. So you invested 167, which will be 2,000 for 10%, 2,000 a year. We invested from 2018 to 27. That will give you, say, remember 29,000. So from 29,000, you have 29,000. Now that's what we have, 29,066. And you have been invested from that time on February income deal. We invested just 9 years, so 8 years, 8 years. So now 27 to 67. You heard you being to say. You are 1.5608. You see, the same person, you heard you will be subenya from here. Will be also being invested from that 27. No, the same amount now we're equally investing at the 2 for about what? About 40 years or so. You heard you only 1.056. About 500,000 difference. So time is what you cannot get back, especially when you make that mindset of just saving all the time. So all that time that you are saving, somebody investing, it was way ahead. You cannot bring that back. See, the second thing, I will come back to the time. The second thing I was here, your interest now will be now. You see, even though you invested, also making sure so you are investing in the right things that will get you the right earnings. Sometimes I'm awfully greedy when it comes to that, but it's very risky when you're trying to do that. So when it comes to that part now, all the time, I try say I advise on those whereby I say you don't be greedy. It's good when these things are going up, especially single stocks and all that. You see, we have to do this in a right way. When it comes to these things, single stocks, the single stocks, and as individual stocks, most of the time it gives you more than the 10%, more than the 10%, which is very good. But what it is when it goes down, it goes with you. So I usually prefer you investing in a fund. See, I'm not advising you. What I'm telling you, I'm getting you all the broad, and then you can choose what you want to choose to. But the thing is, you say, especially these days, you heard the things that are moving very well for the past 3-4 years, and say Nvidia, those ones, Tesla, Alphabet, which is Google, all those things will give you more. But when it goes down, it goes with you. You can invest in it, add debt, and all call. But anytime at BBC, I know say Obi can say yes, intimacy that because the these companies say Drew, the CSA example, with the Hekinja example, it was like Home Depot type. It was one of the biggest. CS You see, one of these companies, I think it was Enron or so. I'm out for that's right. No, these companies were companies and they're big, was doing very well. One day anything can happen, uncle. So to be able to do this and do this wisely, will be minimize it the risk involved. If you do fund S&P 500, when you do S&P 500, you're not taking too much of a risk. S&P 500 makes the difference in the stock market. These are the largest 500 companies. And what your friends say, United States are almost big. They have a standard you have to be. If you go out of that standard, they take you out, bring somebody in. All the time, the only time that thing goes down is the whole stock market is going down. That's the only time, because straight up. In different. It's not the good part, and say you don't have to do too much. You don't have to do too much of a research. Index fund, you put it on. Now I know I start here time no so. That's it will be an energy CEO be koyen kwasiade na the company kofuma near the fufrabishi. So Nvidia in kwasi assembly na kwa from the fufrashi. So you don't have to do that. But when you're investing in these external stocks, you have to make sure you are doing your due diligence. You are researching, you are investing, see what is going on, how they are, everything all the time. You have to keep up with them all the time. If you don't have that time, if you don't know much about it, then so when it comes to earnings now, the caveat they say some stuff which is going to get you more than the 10% I'm saying, but it's very risky. It's very risky. So I'm saying, okay, then we divide it with the half share, number the half a share. That is fine. But remember, I said the risk, the more risk should be put in, the higher your friend saying the interest I'll be, and I said the higher outcome I better. The less the risk I will take, the less I will take. The other things, so bit me do one shame. The other ones, the bonds and all those things, and also and also the savings now. See, but the time side is very, very key. You see, you there are so many people that they are just saving because they are scared. Because they've heard so much about people just talking about how the stock market goes up and down. You see, vitality when it comes to stock market, it's nothing. It's just patient. You see, people don't have that patience. People don't have that time to wait for the things to go up and down. You see, like I said, just the past 5 years, people that had patience, but this 5 years has been the time. So it's big vitality, back and forth, going down and all back and forth. And so this is the time so I produce more. You see, the past 5 years, the S&P 500 has been averaging more than if I'm saying the 10%, it's averaging about 15-18%. So yes, the time maybe you can't get back. We can never get that time back. So the next thing is money. You see, it's good for CA save. It's good for CA investing. But sometimes the money that we put in is too small. You see, when you talk to people, are you investing? Yes, we are. Of course, send our investing every day. Every month we invested $20. Yeah, it's good. The idea of investing a cry by $20 there, faka crack home. Bema, faka crack home. $20 out for, 50 crowd for. You see, if even if we make it the average in this country, in probably make here. Now you invest 15% of that average now, which is about $3,000 a year. That means 20 is too small. 50 is too small. It's too small. Yeah, in training count, you see, because sometimes I did back where you say the 2 years say invested. And so at the end, and should I invested yes, I invested there, by the money now the realm. You see, the reason why I make us a time, we can get back the earnings a kaibaso and the money be a bit to me. You can catch up with those ones. All you have to do is if you are investing, now we invest here, and as we invest for the next 20 years, that's how person invest in a scan wo home bet me start so invested 3,000 every month. Bet me abu am work anymore. By the time they remember, you can't get it back again. You see, investing there, say investing is good, but if you start earlier, you're very, very good. So these are the things I was here. You're looking into those things, not than see save all the time. You see, investing here. There are so many ways a bit me investing. There are so many investment vehicles a bit me stocks, selling kind of mutual funds, real estate so you can put your stuff in real estate. You see, these are the things that we'll see you. But before answer we need a financial education. If you don't have the financial education, we don't know about all those things. All we hear is say, yeah, we have to invest. Why? Because the stock market or investment on us investing is risky. But without financial education, you say there are so many investment vehicles that will be to music too. You see, we name class how the compounding difference and compounding works. And if you know all those things, they change BBR. Like I said, you can invest in stocks, you can invest in mutual fund, index funds, ETFs, real estate, and also a matter of all, you can invest in businesses. Your own business, somebody's business. These days, there are so many startup business you can invest in. But the best one is our investment. We own your friends in business. These are very common investment just for the other ones will go to other minerals, precious minerals like gold and all those things. You know where it's mean. But these are the things if you say it's very simple, a bit rather than say savings and fire savings when a kind of person would draw a chair, you see. Yeah. So for people who don't know much about investing, it is okay to just increase your 403b. Oh yeah, yes. I think 403b, 401k is the same. The 403b is people that work for the government, and that alone, I think this year is about 23,000. You can invest in 23,000. Now we have rough parts in the crowd, which and so these are some of the things that you bet me investing in. Just for the start, you bet me investing in those things. And there are so many things. I always prefer the business parts. You see, invest in your business is so good. And like I said, other people's business. But all these comes for what? Financial education. We don't have the education. We don't know more about it. It's money yet didn't see bet me investing in those things. You see, you move abroad, my dear, and see a quite money about, we don't know anything. And what do we do with our money? And once you buy a statistical and see the go home, a statistical near the go home, you say, we say, you see, it's not smart. So we say, and yes, smart because you are a hard dream. So, bet me drew levels, be a month for drew be, as can be a month for Budin, so with the savings in Kwana, and him say, we can watch a chance and would run. Very tough to get there. So you see, you have to start working smart. You have to start investing smart. Savings in Kwana will not get you there. Savings won't get you there. So these are some of the things that we have to know, that we have so many different things that we can invest in. Look at them, go through them. Or education or moving show us here. Yeah, because with this kind of tool on inflation, inflation so dear now away, but it all comes into financial education. Financial education, the key financial concept, it was you who san your money na bit me a boy, I made me away. Now you share risk and diversification. I'm some crabby when it comes to investing in the single stocks and investing in a mutual fund. One way or the other is more so diversify your assets. We can go more into asset classification, but more be broad financial education and casantion than you. It is with the young cosacra. You share the little ones a bit me. Say the American about the mutual funds or the fund, the index fund, the ETFs, and all those and the single stocks. Yes, when we have the education, you bet me I sign your money. You see, risk and diversification, understanding the risks and diversification of assets is a key to successful investing. Said in kind anything happen to these individual stocks, single stocks now at the oko. Say a at the oko. So you don't say these companies baby omodru no omutimi nkofom da and atam on be kofom no be ya when may you seek from answer. Sometimes no it be happen just quick. You lose so much. So especially if your age when you be brave. Now finances into 2 years and my advice is say make sure say we have fun instead of just single stocks. And that's what between achieve. Now what they can crash and now they can crash. So that is the route I walk on now. Like I said, I said real estate snap so yeah, I'll be real estate. You know, the benefits of real estate is so many things. By saying investing, so we'll save crowding, at least buy BB, invest in things that will bring you money. Invest in things that will let you see money every day. Not right away, crana. As time goes on, the point to be is making you more money. Hey, diversify. Diversify is simple. Say, unfa ni nan sheba kum. Say stocks ni ye crana. Unfa ni nan sheba kum. They mum ye spreading around in case anything happen. We still have these core things. No, are still there. We still have a lot of them. Baku forma, baku ho. You know, mienu forma, miensa ho. That is how you diversify it. You know, when it comes to stocks, very simple. Whereby you buy, you know, there are so many of them. They have one of the stocks. You can buy the total stock market. You know, total stock market, VTI, total the whole stock market over. That means you are investing about 10,000, about whatever, so 10,000 stocks in the world stock market. That means the whole stock market crash here and some also crash. You see, those things are very simple. You don't make more. You make when the stock market make. It goes down when the stock market go down. It's simple. But when you do this individual ones, now that's where you need more research. You're trying to make more. So in that situation, also you have more research. You have to also do more. But without so my advice is just buy these ones. Or especially when it comes to like your 401ks and all that. Remember, there was a time whereby the need to choose from 401k was very, very less. You know, we have few things to shoot. Now we have a lot. Things are changing. No more changing so many things. In the mom from they say there are so many companies we can choose from hundreds of things. I'll be to me at 401ks. Now no, we be to me choose be brave. We be to me choose target day funds. So only who should run out choose target day funds now, which almost all of them are now. You know, you don't have to do anything. You don't have to invest in it. Just that. You know, that goes by the age. Or mind in such a way, the more your friends say, but say a reduce the stocks part, toward the fixed income things, amount. Say, your friends say, because anything happens, that you still be safe. So you can even invest in those things. So these are the things you used to invest. Stop saving, just saving, and invest in things that the asset people. You can do stuff about real estate, like I was saying, real estate. So am I so many things? It helps in so many ways when it comes to taxes. My friends, we have so many things on depreciation and all those things. Even if you don't want to do the physical, ones, there are some people that think say physical one. There are stocks in here are here for real estate. The good thing is say those stocks that are for real estate, 90% of the profit has to be shared by your friends saying these by I will say shared. So we BB or more expensive. We are 90% of the profit. I will say share my shareholders or stakeholders. And also will be those things. So these are common ones. And like I said, a new business. Now you take it, you make sure say diversify so a lot. So yes, to kakra bit me rest to bit me business kakra na ekoso. Bit me still know if we need to stop just single stocks. So I'll bit me those things. Let me up. By all this, it comes by long-term strategy. It's long-term strategy that helps us. Say to me, you see, who strategize things in the long term? My inflation, PC inflation, and a building network effectively. Why? Because you have your goals, you know what you're doing. To a long-term thing. Again, I would say inflation is not something and then quantity. Inflation or You see, so many people here say since United States, a friend said government, the dollar no free, standard no free, a friend said was the money was not being backed by gold, at the bar, just the regular paper. No. That time, the inflation, a year more, let's start here. So inflation has been with us all the time. Sometimes you won't see it, but every time, every time. So we make a long-term strategy. Now you know the inflation rate is about 4%. Near this recession, this pandemic, near the every year, between 3 to 4%. Those things. These are some of the things that's all long-term. Between making sure so what PC those things, because if you know, say you are getting 4%, won't save usika. When you say inflation 4%, won't save usika because you say usika. When you that 4%, just savings alone or just traditional savings alone won't get you even 1%. So now you have a long-term plan. Now you want to build wealth. What do I do to get? Then you start doing the same thing. The next one, is income generation and financial education. That is very key. Without all this, you need that financial education. Now we can't go that further. You see, we need that financial education. It helps individuals to make informed decision. Making sure say we know that income generating, so ABB, making sure say this care them all the time. Not just yes, you see, anytime we saving, now higher who be why because juma hard, you try see make the OC make the OC in Sakascana near this kind of tool. Let's say Sikano so man for so. You see, Adeba goodness says Sikai BBA and that and straight it me a juma 24/7. Nidiana say on the oye juma omre on yeshi unsu no oye juma. But what say Sikan Kushi savings I say a dahwana and yeshi. That is not smart. You making sure you free that situation. The mentality being what say you invest a risky, so you keep on saving. I will see you free that situation. You start to say you PBBS invest. You start to see PBBI all the time. Like I said, there are so many things we can do. So make sure say almost sikano juma hard and change sikano. When you start now, yes, it's okay when you start you're working hard to get the money. But when you're juma to a point where you have so much money, I will say that money in the start to say yeah, juma more. I will say that money in the say like I said, won't mean 24 hours, but sikano bit me 24 hours amount. Once three soon on your shiny the answer the biano or konoba or monitoring co. Why so this is fair sikano to savings net the hone your fee? Why said that sikano at the honma amount for subia? Why say when your interest be our say sikano so? Financial education I was unya. So team as we seek the savings, who say the BMC the savings now media minyashi was free situation let's start to say we invest. Yes, like I said, investment be risky, but we take calculated risk. My method be an example. When I say calculated risk, your investment be on my track record. For so many years, that investment in our track record. So if you be a account when it comes to stocks, about stocks making. I don't say 2 years ago. I don't say your friend is saying 20. I go back all the way to 100 years. I go back to 80 years. That means even though it's risky, we're still gaining something from those investments. Those are calculated one. So sometimes it goes up, goes down. It goes down, goes up. Vitality, everything happening. But at the end of the day, it costs through. I gave an example of 1934, 1935 or so. The Dow Jones was like 355. As I know, Kasani, the Dow Jones is about 47,000 and some. So it tells you that a long run it goes up. The only way is patient. When you're patient, now the trouble, now discipline, with deep line, no super core. Now I think I could do baby, I will say Druma. That patience in the that discipline in the so when you have that discipline, you have that patience. Now, so far as you are investing, you continue doing what you're doing, it's going to go up. And found this in here, and Mark will be now that I can say, a cost road now, but from a cost now, and so what? A cost road because at the end you win. At the end, no, at the cost amount. So you making sure say, yeah, first cannon to work, see whisker just like that. If there's no name on that money, there's no reason for you to save. Obviously now, okay, say if there's no reason for you, and then if say become a car, and I mean investing that scam. Yes, what it is like I said, you see, when you start investing, especially when you invest in the stock market, the first 2, 3, 5 years, up to about 3 years, no, you don't see any friction. So, and anything can happen because of the vitality of it. Semi Pisca Quacotoka, me here 10,000. That's a 10,000 the Kokushima. Anything can happen within that 3 years since I'm quack of Fadi. But semi Quaku be 10 years time, then I can invest in the stock market. So in that situation, maybe I may be 3 years or less, then I can save. And the savings no crown in it, traditional savings. These days we have so many IELTS savings account. I have bet me amount more. As I'm talking right now, I think you can get about 3%, 4%. Or these, so many of them, all these banks know will be brave. I amount. The only thing they say, and your fiscal bank, I'll be to me a investing. But making sure say FDIC. FDIC means it's federally insured. So if you're investing in anything, or if you're saving for anything within a 3 years time, you can invest in this high yield account. I have about 3% or 4%. Amount those things now. Then within the you could be stock exchange. Yes, you can get something on it, but it'll be a time now we here because of the time frame now we here. It's not advisable to invest that in the stock market, but you can do that in a high yield account. The same way, say person will say will be for anything. Most people they are hooked on emergency fund. That's where they invest their emergency fund. Say baby more movie kakra. But say traditional one partner and my friend free order that young. So you making sure, say, like I said, all these things now financial education, a bit more to me who those things, among who those things, So financial education is also key. Financial education helps us said they make it gives us a way to making informed decisions, a way to manage risk. Because if you know the risk involved, if you are financially involved about the risk, a bit boy may make a decision, and it may identify opportunities, for wealth. Say they make if there are so many people I can guarantee you there are so many people that they are so patient, so they are so disciplined, because they know say every time the stock market hit it, a year heated sun. After that, there's recession. They are saving, they are waiting patiently. And when the time comes, they will strike. Anything happens to the stock market, when we will bull market, it will bear market. This time is bull. Bull means wow, bear means goes down. Anytime it goes down, they strike. Can you do that? Can you do that? And all these, they get all these from the financial education. They are more. This financial education, it helps them to make these financial decision, informed decision, manage risk, and that is when build those wealth. See, there are so many people there, they are talking about the last time for them to build wealth is they are waiting, say, hey, there's going to be something coming very soon. And don't just say, see, don't time the market. That's stupid. Men time the market, You see, make sure, say, you have enough money. But when the time comes, don't be like my friend when you let the home no. Building long-term wealth, you have to combine income generation and with continue financial learning and a bit critique friends and have financial and that's a strong foundation for long-term prosperity. You can't just invest. Where is the money coming from? What you're trying to do is you're trying to bring in more money to. You're trying to create things that the more income generating asset. The money you get, you buy some things a bit the long term, and I say a bit me discuss for bro, a bit me make you money all the time, because all the time, sir. You get to a point I was here seek at me my chain. I'll be the kind or say what graduating when your money that is investment is making more than you do. You must send it was adding, you must send a sika, you invest it, I will be a shenny edisika ebe feed dan see make 200,000 a year. You must send I invest yama sika eba afeno so a chain 100,000 now, you earn money now you're making. So we have to keep on doing that. We have to keep on increasing. We have to keep on. You see, the funny part, they say, we hear people that are winning with money. They have 7 sources of income that is coming in. Iris, Nekai, or say, winning with money. And if I say millionaires, so called millions, almost 7 sources of income. It's here, so if you want to be like them, you have to get that 7 source. I'm not saying 7 jobs. Don't do like what I did. me say 7 source of income no me dey be juma 7 so some of them you don't have to make a lot of them. If you have 7 source of income, you don't have to be there. Some might be small, some might be big, but you have 7 source of income. How and a bit with me, the money that you are making right now, you invest the asset I will invest the and a bit you also be determined say I need that 7 source of income. Requirements na meet me afa. Then you start way continuously way and I will try. Some of them will start to be a new baby and so still they continue to do it because that's what you want. That's what you want to do. Yeah, these days you can't rely on just one job. You can't rely on just one income. Not my main can say job, one income. Because there are so many people making a lot of money. They are not there, but the money is coming in. How can you do that? How can you do that? So be determined, say, okay, me try some me make sure say ye be a discabe me. Diana may escape be family sembiano. Diana may say that me. See the money that comes to us, the be a mechanism says can buy one. Ye should then this says can ye didn't see ye didn't keke. Name about one to tin your in area, they can invest in things. We say, oh, continue investing after a while. You see, say those assets you bought, those things you invested in, we started a stress care, bro. See, hey, what not make us a mini baby kind or say what congratulations. Because now Sika we're investing in things and bring you a chain your earning income. So these are the things I will see a try see. Save this car to all the time there MYA because MYA bread dodo. You see, saving is a start. It's not the end game. Yes, I'm not saying saving is bad completely, but you need to make sure say saving name the saving so. You move around my saving is saving the name on so, which is bad. A dear name the will saving I will save it so. A dear name and also. So we'll save the name on this year. That money should not be saving, it should be invested. You see, saving is just a start, not the end game. You see, especially when it comes to capitalism, you see, you cannot save your way out. Capitalism doesn't wait for you. You see, taxes, inflation, and all those things, no. So you have to make sure, say, all the time, you be with that money, no. And that was aqua. Also started say we be with that money, no. You see, focus on investing, offer high potential returns. So you see, you making sure say you focus on that. You see, you will see a limited savings. The savings alone provides low returns. It provided low returns, but see investing the high potential returns. Like I said, it's risky. Now, if you the ones are risky, no crown, and no crown bring you high. But at the same time, yes, it is risky, but we take calculated risk. And you say BR near any sir. You say it cash savings and now Jamaica. Again, if it can be say if you don't understand anything, you have no business investing in your money. Be investing be also TSC. See, the be investing be also TSC. As we keep on saying we invest, as you keep on saying we invest, say a TBR, means after a while, gradually now we'll create multiple income streams and hence financial independence and growth. With savings, it doesn't grow your money. So now that mind shifts, they will have see a shift in your mind. We'll see a change that mindset of savings, the adaptive strategies, financial planning for lasting prosperity beyond savings. Even our savings no DDT. We see it shifted that mindset. I bet we are bringing a lot. I bet we are bringing a demon boom across the investing side, rather than just saving and saving and saving. It will not help. Again, same kind. Saving is just a start. Now, saving is a start, not the end game. Yes, every money that we invest, we will save and go invest. Save and go invest. Only probably bring more that situation. By time, a bus almost invest here. Now, almost yet because almost true. See, when you are doing that, it looks as if at the beginning I say a wise decision. But we must Canada Hosana that inflation a risk and found could baby. And make sure say you spend wisely, save intentionally, be generous. Again, my name is Patrick Berfi, High Life Radio, and I will tell you. And then a topic here, why this is why saving money is stupid. And I say it's bad. Every Wednesday, so your paradigm shift. Subscribe to the Patrick Berfi YouTube channel. Live show of the friends and paradigm shift. See you. We'll talk to you later. Bye-bye.